What's up, guys? Aaron Bennett here. Big update from Celsius. So the auction is over and the winner of the bid is Fahrenheit. That's not a joke. Fahrenheit is the plan sponsor. So now we have a lot more clarity about the future. So in this video, I'm going to try to make it short. I'm going to talk about Fahrenheit, talk about the term sheet that came out, kind of some of the details regarding what they want to do, how that company is going to make money. I'm going to talk about the timeline going forward regarding the disclosure statement, the approvals from the regulators, the vote from us, the creditors, and basically go through what I think is going to happen throughout the rest of the year. And for those of you who don't want to listen to my entire video, I get it. The update for Earn is we still don't know how much we're going to get. We will know at the time of the disclosure statement, which as of now, it is June 30th. So a little over a month until we know exactly how much liquid crypto Earn is going to get back and what kind of equity we're going to get and all the details. Right now, we do not know. For loans, it's the same thing. There is not an agreement with the loan ad hoc yet, so we do not know the outcome of loans. So if that's all you're here for, feel free to leave the video. But if you want to dive a little bit deeper, let's start out with this tweet from Michael Arrington. So he is the founder of Arrington Capital and kind of the guy leading Fahrenheit. So it says, Fahrenheit has won the Celsius bankruptcy auction. The group consists of Arrington Capital, U.S. Bitcoin Corporation. We have Noah Jessup from Proof Group, and we also have Stephen Kokonos, who used to be, I believe, the founder of Algorand, and also partners from Coinbase, Valen, and others. So basically, there is a group of people, which I just shared, that are all going to be creating and starting this new company. And this will be the NewCo that we will get equity in, which we'll cover later in this video. And Michael Arrington retweeted something from Krissy Mashinsky saying, pretty sure we can repossess that Jeep. It was a tweet from yesterday that said, forgive, forget, and move on. So Michael Arrington definitely has a sense of humor. We've seen that throughout this auction process. So I'll include the links to these people on Twitter. If you're on Twitter, you may want to follow them because they are your new daddy. No, I'm just joking. So taking a look at Arrington Capital, they came out with an announcement talking a little bit about the details here. The Celsius UCC said earlier today, the Celsius auction concluded and Fahrenheit was selected as the winning bid. The BRIC bid, BRIC, was selected as the backup bid, which I'll cover a little bit later in this video. Basically, if Fahrenheit does not get approved by the regulators or the creditors vote it down, then there is a backup plan, which is basically a liquidation. And poor Nova Wolf said that we are disappointed by the news today, but respect the decision from Celsius and the UCC. So Nova Wolf is not going to be leaving empty-handed. They are going to get, I don't know, over $10 million as a breakup fee. I forgot the exact amount of money, but basically they are going to be okay. So this is the announcement from Business Wire, and I will cover, mostly coming out of what Simon Dixon said in his Twitter Spaces, some of the differences between Nova Wolf's original offer and what we got from Arrington Capital and Fahrenheit. So let me go through my notes from Simon Dixon's Twitter Spaces right now, and then I'll finish up just with a wrap up of everything that I think's going on. So the Twitter Spaces starts out with Simon saying that we need probably another 6 months before this is all finally concluded and we are all shareholders of this company. There still needs to be regulatory approval. We saw a lot of that with Voyager, where the SEC and all these people got in the way and then Binance pulled out. So we need the regulators to approve this, also the judge to approve it, and then obviously the vote of the creditors to approve this. So in the Twitter Spaces, Aaron Kolodny, who is one of the lawyers at White & Case, came on and answered some questions. So he talks about $450 million that will be retained by this new company and will be used to fund admin expenses, and the rest of the liquid crypto will be distributed. So that seems like more liquid crypto is going to be given back to Earn holders than with the original Nova Wolf bid. But it's important to know that Nova Wolf did up their bid quite a bit to compete with Fahrenheit. So their initial bid is not what they ended up with, but ultimately the UCC and Celsius picked Fahrenheit. Aaron Kolodny of White & Case said that they realized people wanted to get liquid crypto out, and that was very important, and also the importance of getting equity for a chance to be made whole. He also says they're trying to structure it in a way that will be the most tax efficient for everybody. Talking about clawbacks, he did say that those are going to stay the same, and that was the decision of the UCC and Celsius. So Clawbacks still remain. Essentially, anything under $100,000 is not going to be clawed back. If you are between $100,000 and $250,000, you may have to pay that, I think, 27.5% back to not get litigated. But probably if you have clawback exposure, you're already in that Telegram group, but I just want to share that that has not changed. So June 30th, again, is going to be when the disclosure statement should come out. Aaron says that the court will then set a disclosure statement hearing date to make sure that the creditors get all the info that we need to make an educated vote on this plan. He says it'll be like a stock prospectus to vote for or against the plan. Then there will be between 28 and 35 days to solicit the vote, and people will have objections. You may get objections from obviously like the SEC or whatever, and then ultimately the judge will decide whether or not it is confirmed. So Simon asks Aaron Kolodny whether or not this will be a side business. Will there basically be enough incentive for this new company to make as much money as possible? Because that's a really big deal. We don't want this company to be something where they're going to make a bunch of money doing nothing, even if the company fails. There has to be an alignment of incentives. And Aaron Kolodny says no, there will be a new CEO. That'll be his full-time job. And again, that'll be the former CEO of Algorand, Steve Kokonos. So Aaron said a big difference between this plan versus the original plan from NovaWolf is the management fee. So originally, the management fee was going to be a percentage of the business's net asset value, but now it is going to be a fixed amount plus equity in the company, so that aligns incentives better. And there's going to be a lot of incentive for this company to beat the crypto market, because when the crypto market goes up, obviously the staking business, which is going to be a part of this, and the mining and venture capital and other things that are going to be tied into this company, they're going to go up too. But the incentives of this company is to do better than the market. He says that people will be able to sell the equity when they get it. A lot of people are going to get equity and maybe they just don't want anything to do with this company and they just want to cash out completely. He says there will be a market to do so. Simon asked Aaron Kolodny if they will be rebalancing the entire Celsius portfolio to Bitcoin and ETH, and Aaron said they're still working on that to make sure it is regulatory compliant. And regarding the class claim certification, which is kind of separate, but that's the whole thing regarding non-contract claims, Aaron says he feels that that will hold up in court, and they are actively litigating against Series B holders. So this new company, Fahrenheit, will be 100% owned by the creditors. There will be DeFi, like staking, institutional loan portfolio, private equity and venture capital investments. There will be the Bitcoin mining, this intercompany loan that'll hopefully get settled, and then these companies will be substantively consolidated. And also this NewCo will get $450 to $500 million of liquid crypto. So the convenience class, they said, is still going to be the same. Basically, if your claim is $5,000 or less, so that is at the time of bankruptcy, we don't know if that'll be dollarized in US dollars or it'll be paid out in kind. We don't know yet, but that is still going to be held up, and that is going to be you getting back 70%. So talking about the board members, there's going to be 7. So that's similar to the NovaWolf plan. 2 have been selected by Fahrenheit. The UCC is going to select 2, and then the last 3 have to be agreed upon by the UCC and Fahrenheit. So what's cool is that this new company really wants to eventually be on a public stock exchange like NASDAQ. So talking more about this management fee, it is set at $35 million a year. And this is good because it doesn't mean that when Bitcoin rips to maybe over $100,000, that the management fee is going to take advantage of just the increased price in crypto. It is set. So in the term sheet, they talk a lot about mining and their plans to really ramp up the mining and get that more profitable. I'm not going to go into all the details because it gets into megawatts and all this type of stuff that most of you guys don't really care about, but there is a plan set forth for making mining more profitable, which is going to be a big part of this company. So again, just to summarize, they are going to be generating yield through staking and DeFi, profits from mining, venture capital, which Celsius actually invested in using our money or Celsius's money. So right now, hearing from Simon Dixon, he isn't 100% totally ecstatic about this. I think when the disclosure statement comes out, and actually between now and when the disclosure statement comes out, there's going to be a lot of talks and negotiation to see if we can get everything really, really aligned. That seems to be Simon's biggest concern, is that these board members and the incentive structure of the company and the management team, they have to be completely aligned with the shareholders, meaning yourself, because if that's not aligned, it's not going to work. So taking a look at the term sheet on the computer, we can then see this $35 million fixed management fee. They talk about incentive stocks, stock options, which I'm not going to go into because this video would be very, very long. So the plan sponsor, meaning Fahrenheit, will contribute $50 million to this NewCo, but they have different periods when they can unlock and basically sell their equity when the net asset value is 150%, 200%. So they just go into some of the details here. So talking about releases, basically that is going to stay the same. They can still go after, or I should say the litigation trust can still go after Alex, Daniel, and the other insiders. So they go over the officers. We have Stephen Kokonos as the CEO. We have a CFO and other people as well. They talk a lot about mining, which I touched on, talking a lot about megawatts, getting more mining equipment online and how they're going to do that, how they're going to scale the mining operation. They talk about how this will be a public reporting company and will file financial statements. And then there is this backup plan if Fahrenheit does not go through and this company does not get approved. So there will be an orderly liquidation, but the downside is this is going to cost $50 million for admin fees, which seems crazy. So we will see what makes the most sense. We'll figure out together as a community if we should be voting in favor of this plan, or maybe we should be voting against it, and then we should just get everything liquidated. Right now, it is too soon to know, but when the disclosure statement comes out, we will be able to really analyze all the financials and see what makes the most sense. All right, guys, so that is it for the video. I will end it there. Just to summarize again, we are waiting for the disclosure statement to come out before we have any more info, and the date right now is June 30th. So that is it. We are again waiting to see if the class claim will be certified, to see if the UCC can file a claim for all of us so we don't need to do it on our own. And yeah, there's nothing to do right now. We're still in the waiting game, but this is a step in the right direction. I'm glad the auction is finally over so we can keep moving forward and get creditors back some money sooner rather than later. All right, guys, thanks for watching. Till next time, talk with you soon, and bye for now.